Welcome back to Crest Finance. Today's story takes viewers deep into a silver crisis that many people did not expect. It is not happening on Wall Street. It is not happening in London. It is happening in India, one of the biggest silver buyers in the world. For years, India has bought huge amounts of silver from other countries. The nation uses this metal for jewelry, coins, bars, and industrial products like solar panels and electronics. In fact, India depends on imports for more than 80% of all the silver it needs. This makes the country a major player in the global silver market. But something changed this year. The Indian government began placing strict limits on silver imports. These new rules started in May when officials announced restrictions on almost every form of silver entering the country. Then, in June, the government went even further. Silver grain and silver powder were added to the restricted list. Now, importers must get official approval before bringing these materials into India. Why did the government do this? The answer connects to a bigger financial goal. India has been trying to protect its currency, the rupee, and preserve its foreign exchange reserves. Silver and gold imports cost the country large amounts of money. By slowing down these imports, officials hope to ease pressure on the rupee and reduce the trade deficit. Earlier this year, the government also raised import duties on gold and silver, pushing the rate up to 15% from just 6% before. The effects of these decisions came quickly. Silver imports into India dropped in a dramatic way. In May, the country brought in only 46.8 metric tons of silver. Compare that to the same month 1 year earlier, when imports reached 534.3 metric tons. That is a massive decline, and reports suggest the numbers fell even further in June. At first, the shortage did not appear right away. After the duty increase in May, many investors decided to sell their holdings in silver exchange-traded funds. This action released extra silver into the domestic market. For a short time, this extra supply covered the gap left by lower imports. But that cushion did not last. Once those supplies were used up, the impact of the import restrictions became impossible to ignore. Today, the domestic market relies heavily on one major source, Hindustan Zinc, the country's largest silver producer. Dealers say this single supplier cannot fully replace what used to come from imports. As demand slowly returns, following months of weaker buying, many expect the pressure on local supply to keep growing. This story matters far beyond India's borders. The country typically brings in silver from the United Arab Emirates, the United Kingdom, and China. When such a large buyer suddenly steps back, it can shift patterns across the entire global silver trade. Analysts are watching closely to see whether international prices will feel any ripple effects from India's reduced buying. It is also worth noting how unusual this situation is. Normally, when demand goes down, prices tend to fall as well. But in this case, weaker demand is combining with a serious supply squeeze. That unusual mix could lead to rising local prices, even while nationwide appetite for silver remains soft. So what is really happening here? A government is trying to protect its currency. Import rules are tightening, supplies are shrinking, and a shortage is forming, not because people stopped wanting silver, but because policy decisions changed how much of it can enter the country. To understand the current situation, it helps to look at the timeline of restrictions. Back in May, India's government placed immediate limits on silver imports across nearly every category. That single move sent a clear signal to the market. Then, just 1 month later in June, the rules tightened again. This time, silver grain and silver powder were added to the restricted list. These two forms of silver are widely used in manufacturing and jewelry making, so bringing them under stricter control had a real impact on supply chains. Under the new system, importers can no longer bring in these materials freely. They must first receive official government authorization. This extra step slows down the entire process. Shipments that once moved quickly now face added paperwork and approval delays. For a market that depends on steady, predictable supply, this kind of friction creates real problems. Alongside these import controls, the government also raised the import duty on both gold and silver. The rate climbed from 6% to 15%. This change alone made imported silver far more expensive for Indian buyers, even before the stricter licensing rules took effect. Together, the duty hike and the new restrictions created a double barrier for anyone trying to bring silver into the country. The numbers tell a striking story. Trade Ministry data showed that silver imports fell to just 46.8 metric tons in May. During the same month, 1 year earlier, India imported 534.3 metric tons. That marks a drop of more than 90%. Reports indicate that the decline continued into June, with imports falling even lower than the previous month. Industry voices on the ground have described the pressure this is creating. According to Reuters, Rajesh Khosla, chief executive of MMTC PAMP India, explained that supply constraints have pushed domestic silver prices well above global benchmark levels. Bullion dealers in cities like Mumbai and Kolkata have reported similar patterns, noting that local premiums have climbed sharply in just a few months. To put this in perspective, premiums on domestic silver reached about $6.50 per ounce recently, more than 10% above international prices. That stands in sharp contrast to May, when the market was actually trading at a discount of up to $5.50 per ounce compared to global prices. In other words, the market flipped from a discount to a significant premium in a short period of time. Dealers also point to a temporary factor that delayed the shortage from appearing sooner. After the duty increase in May, many investors chose to exit their positions in silver exchange-traded funds. This decision released additional metal into the domestic market, which helped cover the gap left by falling imports. For a while, this extra supply kept the shortage from becoming visible. However, once that reserve was absorbed by the market, the underlying supply problem became clear. Today, much of the domestic supply comes from Hindustan Zinc, India's largest silver producer. While this company plays an important role, dealers say it cannot fully replace the volume that used to arrive through imports. As demand shows early signs of recovering after a period of weaker buying, many expect premiums to rise further in the coming months. It is also worth noting where India's silver typically comes from. The country has relied heavily on the United Arab Emirates, the United Kingdom, and China for its supply. With imports now restricted so tightly, attention is turning to whether these trade relationships will shift and whether new sourcing patterns might emerge. The most immediate consequence falls on everyday buyers inside India. Families who rely on silver for jewelry, gifts, and festival purchases now face higher prices at local shops. Wedding season and religious festivals traditionally bring strong silver demand across the country. With supply tightening and premiums rising, many households may find themselves paying noticeably more for the same items they purchased in previous years. Small jewelers and retailers, who often work on thin profit margins, also feel this pressure. When their costs rise, they must decide whether to pass those costs on to customers or absorb the loss themselves. Beyond households, industrial users face their own set of challenges. Silver plays an important role in solar panel production and electronics manufacturing. Companies in these industries depend on a steady, reliable flow of the metal to keep production running smoothly. When imports slow down and rules become stricter, manufacturers may need to search for alternative suppliers, adjust their production schedules, or absorb higher material costs. Any of these outcomes can affect pricing further down the supply chain, eventually reaching consumers who buy solar equipment or electronic devices. On a national level, the story connects to India's broader economic strategy. The government's goal in raising duties and restricting imports was to protect the rupee and support the country's foreign exchange reserves. From this angle, the policy appears to be working as intended. Lower imports mean less money leaving the country to pay for silver purchases abroad. This can ease pressure on the currency and help manage the trade deficit. Supporters of this approach would argue that protecting the national currency benefits the entire economy in the long run, even if it creates short-term discomfort for silver buyers. However, there is another side to consider. Bullion dealers and market analysts point out that reduced imports have created real strain in the domestic market. Premiums have climbed sharply in just a few months, moving from a discount compared to global prices to a meaningful premium above them. Critics of the restrictions might argue that this squeeze places unfair pressure on ordinary buyers and small businesses, who now must pay more simply because of policy choices made at the national level. Both perspectives reflect legitimate concerns, and the full impact may only become clear as more time passes. Looking beyond India, this story carries weight for the global silver market as well. India remains one of the largest silver-consuming nations on Earth. When a buyer of this size pulls back sharply, ripple effects can reach international pricing, particularly if this pattern continues for several more months. Some analysts believe reduced buying from India could ease upward pressure on global silver prices. Others suggest that if Indian demand eventually recovers, while import restrictions remain in place, the resulting supply squeeze could actually push prices higher, both inside India and on the world stage. This situation also reflects a larger global trend already in motion. For 6 years in a row, the world has seen a silver market deficit, according to conservative industry estimates. That means demand has outpaced new supply reaching the market, even before India's restrictions took effect. Layering a major supply disruption from one of the world's largest buyers on top of this existing deficit adds another layer of uncertainty for the months ahead. For everyday people watching from outside India, the story offers a useful reminder. Precious metals markets are deeply connected across countries. A policy decision made in one nation, aimed at protecting its own currency, can influence prices, supply chains, and buying decisions far beyond its own borders. Whether someone buys silver for jewelry, industrial use, or long-term saving, understanding these connections helps make sense of price changes that might otherwise seem confusing or sudden. Several questions remain open as the situation develops. Will India's government ease these import restrictions if domestic prices keep climbing? Or will officials hold firm, viewing currency protection as more important than short-term price relief for buyers? Analysts are also watching whether demand inside India will continue recovering after months of weaker buying. If that recovery gains strength, while import rules stay tight, the supply squeeze could deepen further. On the other hand, if demand remains soft, the market may find a new balance without major additional strain. Viewers should also consider the timing of upcoming decisions. Trade Ministry data is released regularly, and each new report offers a clearer picture of how deeply imports have fallen and whether that trend is stabilizing or worsening. Industry voices, including bullion dealers in major cities, continue to share updates on premium levels compared to global benchmarks. These figures serve as an early signal of how much pressure the domestic market is truly facing. There is also a broader trend worth watching closely. For 6 consecutive years, the global silver market has shown a supply deficit based on conservative estimates from industry analysts. This means worldwide demand has outpaced new silver reaching the market, even without factoring in India's current restrictions. If this long-term deficit continues alongside a major supply disruption from one of the world's largest silver buyers, the coming months could bring further shifts in both domestic and international pricing. Another factor to monitor involves where India sources its silver. The country has traditionally relied on the United Arab Emirates, the United Kingdom, and China for the bulk of its imports. Whether new trade relationships form, or whether existing ones adjust to the tighter rules, could shape how quickly the domestic shortage eases or continues. For viewers who want to stay informed, a few simple steps can help. Following updates from official Trade Ministry reports offers reliable, verified numbers rather than speculation. Paying attention to statements from established bullion dealers and industry executives can also provide useful, on-the-ground context. And watching how global silver prices respond over the coming months may reveal whether this regional story is beginning to influence the wider international market. This story raises a broader point that extends beyond India alone. Precious metals markets around the world are closely connected. A policy change made to protect one nation's currency can influence prices, supply chains, and everyday purchasing decisions in ways that reach far beyond that country's borders. For anyone who follows silver, whether for personal savings, jewelry, or industrial use, this connection is worth remembering. Crest Finance would like to ask viewers directly, what do you think should happen next? Should India ease these restrictions to help domestic buyers, or should the government continue prioritizing currency stability? Share your thoughts in the comments below. Your perspective adds real value to this ongoing conversation, and many other viewers will likely find it interesting to read. As this story continues, Crest Finance will keep following the latest trade data, dealer reports, and policy updates to bring viewers accurate, balanced coverage. This situation serves as a clear reminder that even a policy decision made thousands of miles away can shape the value of the metal sitting in someone's own hands. Thank you for spending this time with Crest Finance today. If this story added value to your understanding of the silver market, please consider subscribing so future updates reach you as soon as they happen. And once again, feel free to share where you are watching from in the comments below. Until next time, stay informed, stay curious, and thank you for being part of this community.